Let's get it on and let's get to it. Good afternoon. My name is Joe Terril, president of Terril & Company in St. Louis, Missouri. Private wealth managers with approximately $520 million worth of discretionary money under management. Today is June 1st, and we just finished a pretty turbulent time in the market today, and it's been a pretty turbulent time for the last 30 days. This video presentation we post to our website and other sources to keep our clients as well informed as we can about what we think are the most important issues of the day, what we see for the world economy, the economy here in the United States, and investment markets in particular. As always, helping me is Jesse Baker. And Jesse, I'm wound up tonight and got a lot to say, so I hope this doesn't run into an hour or more and you'll have a lot to edit and a lot of work to do. You're going to earn your job with this session, I'm sure.
I can edit plenty, just don't break my camera.
I promise I won't throw anything. I won't break the camera. So we're going to talk a little bit about investment markets, and then we're going to discuss what's going on in Europe and the United States as I see it, maybe touch for a few minutes on China, and then we'll sum it up. And thank you for joining us. Investment markets for the past 30 days have been downright terrible. We are seeing a loss of confidence around the world in economies and the outlook. Consumer confidence, business confidence, it's being greatly affected to the negative by worries and concerns over Europe and what's going to happen to the European economy. I think to a certain extent also events going on in the United States is worrying people, and therefore we've seen stocks go down. We've seen almost a panic buying into U.S. government bonds that have reduced interest rates to all-time record lows, which are on the verge of being absurd. We have seen interest rates go negative in Germany as it's perceived by a strong, financially strong, that is, European economy. Therefore, people are willing to put their money there and actually accept a negative rate of return because they're so concerned about losing their principal in some of the other countries. So it's a fascinating time to be alive. It's a fascinating time to be in this business and see what's going on. And we will try and explain, which I want to do, why this is a long-term positive. And I strongly believe that what is happening in investment markets right now, I understand why people are afraid. I understand why people are treating this as a negative, but it bothers me that people don't understand the direction that the world's going in is very much a positive. It's been done before, it'll be done again, and there really is not a choice that people in Europe have about making an irrational approach. It's not going to work. There's only one direction and one way they can go, and we'll discuss that in just a few minutes. So I think the pullback in the stock market in particular is overdone a little bit, as people are worried that there's some type of systemic slowdown in the economy. And I think this slowdown in the economy is simply due to the loss of confidence that investors have and the fear people have about what is happening right now. And this is understandable, but I also want to explain why the direction that the world is going is very much a positive. So understand that may be a little bit confusing, but let's now maybe begin to talk in particular about Europe, and I'll try and clarify what I mean by the fact that what's happening in Europe basically is a positive, not a negative. What's happening in Europe is the death of socialism. And it is, as I mentioned a few minutes ago, it's an incredibly interesting time to be alive. It is because I also was alive to see the death of communism in the old Soviet Union. We saw the Soviet Union fall. We saw the Berlin Wall come down. We saw hundreds of millions of people join into the balance of the world, into a productive economy where there was certainly a bigger movement towards freedom, a bigger movement towards economic freedom, and a bigger movement towards the production of goods and services that are consumed by people all over the world. This communism died of its own accord. It died because it wouldn't work, and it didn't work, and it didn't provide goods and services for the people of the Soviet Union. I want to remind people watching this video that there was very little military action when communism fell in the old Soviet Union. And if we look back now and ask ourselves, well, when communism failed, was it a positive eventually for investment markets, or was it a negative? And the answer is a resounding, it was a very big positive. There was a lot less money that had to be spent on national defense around the world. There was a lot less tension in the world, and we brought in hundreds of millions of people into the productive part of the world economy. I relate that to the fact that socialism, as it's been known in the southern countries of Europe, the Greece, Italy, Spain, Portugal's of the world, it doesn't work. It consumes the net wealth of the country, and it doesn't produce anything. Those countries literally are going broke. So when I said in the first session that they don't have a choice, what I meant by that is they have no choice about moving away from socialism. They have to figure out, what are we going to sell the rest of the world? How are we going to move towards a more democratic and capitalistic system? Because the balance of the world is running on this type of system, and we're going to have to figure out what we sell the rest of the world. No one is going to lend those countries any more money to continue to sit and be idle and consume net wealth, much like a cancerous growth eats away at healthy cells. It's not going to happen, and their only choice is to turn away from it. And that is healthy and good, to get a lot more people in Southern Europe producing goods and services and figure out what they're going to do to participate in a world economy will create a lot of economic activity. So when I hear conversation and worries in the investment markets that, quote unquote, well, Greece may drop out of the European Union, I sort of hope they do, because this issue of Europe now has been affecting the investment markets for going on 3 years. And let's bring the issue to a head and let's put it behind us. Because here's the two choices that Greece or the other countries would have. Go ahead and drop out of the European Union, go back to using your drachma as a currency. At that point, your economy will collapse, you'll run rampant inflation, and you very well may have a gigantic civil protest in the streets for the very simple reason that no one around the world is going to take your drachma. You're a self-confessed serial, financially irresponsible, overspending government that does not want to produce goods and services to pay your way. when it comes time this winter to buy $100 million worth of energy from perhaps the Middle East countries, they're not going to sell you $100 million worth of energy and take a drachma. When it comes time to buy grain from a Canada or an Australia or one of the other countries, they're not going to sell you grain and take your drachma. When it comes time for you to reward your pensioners, and some of the politicians are even stating they want to give the pensioners increases in their pension, give them all the drachmas you want. They won't buy a thing. And when the pensioners understand this and realize this, then they may be rioting in the streets. You have one choice and one choice only. You're going to have to accept an austerity program and be economically responsible. And at the heart and soul of that program is going to be a lot of soul searching to find out what is it that you're going to sell the rest of the world in order to pay your bills. Certainly the Greek people have a tremendous heritage, a tremendous culture, and very bright, intelligent people. They can figure it out, and they'll know, if they're forced to do so, how are we going to participate in the world economy. I don't think they will sit there and let themselves become a banana republic, third world country with literally a collapsed economy, rampant inflation, etc. There is no choice. Let's get it on and let's get to it, because if Greece will try that, and other countries, Italy, Spain of the world, can see what a disaster it was for them, the better off that will be for all concerned. Now, I say this, that I also hope, perhaps, other than the human tragedy part, maybe Greece does try that. The elections in Greece are coming up in 2 or 3 weeks, and the party that accepted the austerity program is slightly ahead in the polls, so maybe they're going to go back and they're not going to drop out of the European Union. But if they did, it wouldn't be bad for the rest of the world, and it would certainly show the rest of the world what happens if you want to deny reality. You want to pretend that 2 and 2 somehow equals 8, and that you don't have to be financially responsible, and that you don't have to be concerned about what you're going to do for a living. I relate this to the United States. We have a version of this exact same problem in this country right now. We want to spend more money than we bring in, and we want to consistently do it. We want to have entitlement programs that we don't pay for. We want to have benefits that we can't pay for. We want more than either A, what we're willing to pay for, or B, we're capable of paying for. And this will eventually have to stop in the United States also. California is not going to be able to run a $14 to $15 billion budget deficit simply because they want to. It will not work. And the quicker this lesson is seen by all, the better. And that's why it's a positive. It's much like someone's that starts on a major exercise program, and they say, well, my leg hurts and my hip hurts. That's all part of it. The fact that you're going through this exercise and you're going to lose weight, and you're going to have a much healthier heart, you're going to lower your cholesterol, all of these type of things are long-term a very good thing to have happen. And this is what Europe's going through. It's fascinating to me to say, I'm going to be alive to see the final dagger driven through the stake of socialism, as if it's some type of valid economic political system. It's not. And there's going to be no turning back. What you're seeing right now around the world is just that. The death of socialism is a positive for the rest of the world, and ultimately it's a positive for those countries. Let me remind you that It's been a very big positive for the Soviet Union. When Brazil went bankrupt in the 80s and the rest of the world went to them with a bailout package and an austerity program, and Brazil's followed that program, it's not an accident that they're one of the strongest economic powerhouses in the world today. They followed the program, they switched, and this is going to be an economic upheaval in Europe, I'm sure. Change doesn't come easy, but I don't think you're going to see massive bloodshed in the streets. This is going in the right direction. The regime change in Europe, the regime change in Libya, and hopefully a regime change in Syria are also going to be very big positives for the world. These are all ultimately very good for a business climate, which would make them very good for the investment markets. I want to bring up another issue that's affecting investment markets, and that is the fact that they're worried about China's economy slowing down. And what China is attempting to do is what other countries have done at certain stages in their productive life. Right after World War II, Japan was a producer of articles in mass quantities. And somewhere along the line, Japan decided, no, for our economy it's better off to be a quality producer. And one day around the world, Japan all of a sudden was producing the highest quality cameras, automobiles, electronics. South Korea recently has made a similar change. South Korea was a mass commodity producer, and now cars like Kia are consistently getting ratings as being the highest quality. Samsung in appliances constantly gets a very high quality rating. China is in the early stages of attempting to do the same thing. They want to move away from just being mass market producers into being more value-added producers, being more high technology producers, more quality goods than just mass production. So when I see some of the economic statistics come out of China, it doesn't worry me perhaps as much as it does other investors, or it does the media certainly, that China's economy is slowing. China's economy is making that natural transition towards wanting to be a value-added, high-quality producer of goods and services. So I really feel that around the world, as we can get these problems in Europe pushed a little further, let's get them along, and we'll restore a lot of business confidence around the world, and that ultimately is going to be very good for investment markets. And when I mentioned previously that California, as an example, is not going to be able to run that budget deficit, one of the reasons California is not is no one's going to loan them the money. And the federal government and the rest of the taxpayers in the United States is not going to give them the money to be financially irresponsible in the state of California. Much the same as the balance of the world has no interest in loaning Greece money to continue to be financially irresponsible. So, again, these events are very good, and I'm glad that they're happening. I'm a little surprised that there isn't more conversation being made about the positive aspect of this. Right now, everything we see is a negative comment, but this is the purpose of the video, Jesse, that I appreciate you helping us do here, is to try and explain to our clients, potential clients, and other interested parties that there is a big positive to this. Other economic news that's been coming out in the United States is also somewhat positive. It's not as doom and gloom as people would think, and they're overreacting to what they believe this potential doom and gloom and the end result's going to be. The end result's going to be fine. It's going to be positive. So if we continue to see investment markets go down, we'll be a buyer of good quality companies that produce goods and services and sell them all over the world. With that said, Jesse, I thank you for helping me with this video, and we appreciate everyone that tuned in and watched, and certainly all of our contact information is available everywhere, and we'll see you again in about 30 days, and thank you for joining us.